Hi everyone, today I'm talking about 3 stocks to buy in January 2020, the first one of 2020, which is insane, but it is my favourite series, talking about 3 stocks I'm most likely going to buy. This is probably going to be the last video I make before Christmas, so I hope you have a really good Christmas. I'm probably going to be a little bit more quiet over the next couple of days. Towards the new year, I've kind of got a few trips away, so I won't be recording as many videos, but I'll try and get at least 2 videos out here between Christmas and the new year. So hopefully I'll get that done for you guys. But give the video a like before I get stuck into it. It really helps the channel out. There's a Patreon down below. Everything that goes into that account will be put back into the channel. New camera equipment, new tripods, new lighting, new microphones, whatever it is. It just helps the channel out, and it's just helps the channel grow and share this information for everyone. But we'll get stuck into 3 stocks I'm buying for 2020. My number 1 stock is Disney. Now, I've talked about Disney so much over the last 2 months, and I've still not bought any Disney stock, but the money is now in my stockbroker's account. It's just sitting there waiting for me to pull the trigger and buy Disney. I'll be totally honest with you. I'm looking at the stock market now, and I'm looking at it, and it's had a really good run recently, and I'm maybe it should pull back a little bit. Disney stock is kind of run out of steam as well. It's not really going up with the market. So I'm thinking maybe if the stock market pulls back 2-3% now, Disney stock might pull back 2 and 3% with it. It might go a little bit cheaper. But eventually I will buy Disney stock before the end of the year. So I don't mind buying it for a little bit extra, but I'm kind of waiting for it to just go down a little bit more. But if it doesn't by towards the end of the year, I will just go and buy Disney stock because it's a fantastic company. I've talked about it previously about how great the theme parks are. The numbers have been absolutely amazing this year. There's some fantastic improvements coming, so that sort of traffic to the theme parks will still come. And they're investing. Obviously, they've just bought Fox. They've got Star Wars rights now, so they're kind of bringing in some Simpsons stuff. They're bringing new Avengers stuff into the theme parks, so that kind of will push hopefully traffic back in for 2020, which will be awesome. The merchandise is fantastic. Some of the brands they own is are great, and hopefully we'll see Disney Plus kick on in 2020. Some of the growth numbers that have been coming out look fantastic. But I've said before, Disney, because they've got all these amazing brands, it's so easy for them to do shows like a Spider-Man TV show or a Star Wars TV show, because they've got the rights to it. Whereas someone like Netflix, who you would say is the main competitor, they've kind of got to create all these new storylines and shows from scratch, and it's really hard for them. I think they've only kind of got a couple of shows that are kind of household shows where everyone's oh, I can't wait for the next season. Stranger Things being one of them. But when you look at Disney, it's so easy for them to just bring out TV shows that will kind of get a lot of traffic. All they had to do was do a backstory on R2-D2, and everyone's oh, I'll go check this out and see what's happening. So Disney Plus will be fantastic for Disney going forward. The amount of movies that have just come out, I don't gamble on earnings coming up, but it looks like Frozen has done absolutely amazing. We've got Star Wars, which I'm sure will do really good as well. Jumanji, which I think is also a Disney movie, obviously that should do quite well. So the amount of movies that have come out so far will kind of seem like Q1 should be quite strong for Disney. Obviously also they'll have the merchandise from Christmas sales and everything. So with that combination, the licenses and everything that's coming up for Disney going forward, it seems like a really good investment. And like I say, I will buy Disney shares by the end of this year for sure. So that'll probably be one of my videos over the Christmas period. I'll make a video about when I buy some Disney shares, but that's definitely the number 1 stock that I'm going to buy next. Number 2 is Tencent. Now this is a one that I'm going to have a little bit more of a deep dive on, but I look at Tencent now and I think a lot of the US stocks are overvalued, and the stocks I'd like to buy iRobot, Altria, even Dropbox pull back and then it's gone back up again. Those kind of US companies are kind of at prices where I'm they don't really interest me right now. So I'm looking at other things, and one of the things that I looked at, and I made the 5 Chinese stocks for 2020, was Tencent, because it's an absolute monster of a company. And with the potential of me maybe selling some JD shares and removing some of that risk that I have with Chinese companies, because I do have Alibaba, JD.com and iRobot, which are kind of classed as a Chinese company because of all the products it gets made there. Those three companies have a lot of exposure to China, but if I remove some JD shares off the table, it kind of gives me a little bit more room to play with some Chinese stocks. And Tencent is one that really interests me because it's still down quite a few percent off its 52-week high. And as well as it being off its 52-week high, it's a company that is absolutely massive. It is unbelievable. Like the amount of companies that you get with Tencent, and like the little mini stakes, having so many little companies over in China is fantastic. Just to start off with, WeChat is a messaging service that is like the must in China. Like everyone has it. You got QQ, you got the investments that Tencent have in the payment industry. Them and Alibaba kind of like just run the whole payment industry really over in China. Tencent also have a little investment into JD.com. So even if I sell some shares in JD.com, it's okay because I kind of like cover that with Tencent because they own a bit of JD.com. They also have the gaming industry that own some great titles there. Obviously, Epic Games that are doing, the number one kind of player right now in the gaming industry. We have the new Xbox and PlayStation coming up next year. So obviously that will be really helpful for Tencent and sales-wise. They've got League of Legends, own Riot Games. With the exposure of like esports and the growth of esports, Tencent are going to be, big players in that kind of industry going forward. So when I look at Tencent and the amount of like investments they've got and the industries that they're in, them and Alibaba are, two massive players in China, and I do own Alibaba. It's like where I go invest in Tencent now, so I'm kind of like considering Tencent. But like I say, I'll probably only buy Tencent if I do release some JD.com shares. So let me know what you think of that. Do you think I should sell some JD.com shares and then go invest some of that kind of like profit into Tencent? You let me know, but that's kind of like one of the changes that I'm thinking of doing in January 2020. And my number 3 stock is Momo, which is another stock that I covered in 5 Chinese stocks to buy in 2020. And this kind of caught me eye. I didn't really know about this company until I made that video. And now that I know about it, I'm really interested in the company itself. Like I say, it's one of those where I'm kind of thinking, do I sell some JD.com shares and then invest that profit into Momo? You guys let me know what you think about that, and I'll have a look at it. And also, I'm considering making a full video on Momo at some point when I do a complete deep dive into the company. But Momo itself is a Chinese dating platform, which is the biggest in China. But as well as that, now it's made other kind of investments and is now kind of an entertainment platform as well. So it's a little bit more of a broader company, which is also really good, because when you're relying on just a dating kind of company, then obviously there's always that risk of, can a trend change and it moves to another fresh company that kind of does something completely different and everyone goes there and it's kind of left there. That's always a big worry with like a dating company, but now it's become a bit more of an entertainment platform, makes it a little bit more secure. Now, Momo is down absolutely huge, mainly due to its revenue growth slowing from about 50% in 2018 to now going to about 25%. So even though the revenue growth is fantastic, the big massive slowdown is what everyone's kind of like a bit worried about. But when you consider that it's 25%, that's still not really too bad at all. So the growth is fantastic. It's also a company that is making profit, which is great. It's making quite a lot of profit as well, which is a fantastic thing. The PE is a low PE. A company that's growing at like 25%, and it's trading at a PE of 22. That's a really low PE, really. So that's something that really interests me as well, is that it's such a cheap low PE for a growth company. Only with Chinese stocks, really, you kind of get that amount of growth in the low PE. Just like Alibaba, for example, that's a really big growth company with a low PE. Momo is a very similar one, really. So that's something really interesting, that it's at such a low PE. It has got a little bit of debt on its balance sheet, which is kind of like recent that it's come on the balance sheet. But at the same time, Momo's got 3 times the amount of cash to debt. So if it wanted to, it could pay off the debt on its balance sheet with its cash. But it hasn't at the moment. We might see in the future if it does, or we'll see what happens. But maybe because they're holding that cash because they want to make another investment and diverse the company going forward. So at the moment, when I look into Momo, I see fantastic growth, some fantastic balance sheet, and a very low PE, attractive PE as well for a massive growth company like this. So Momo is one that I'm also considering. But like I say, with Chinese companies, they're so vulnerable to Trump just going, oh, that trade deal is totally off the table, and then Chinese stocks go down absolutely huge. As well as that, the Chinese economy, sometimes it comes out that Chinese economy growth has slowed down so much more than what we thought, and there's Chinese stocks go down. So I do have to balance the risk of having these Chinese stocks in my portfolio. I kind of like remember that risk to reward thing, and don't put all my eggs in one basket. So these two I'm kind of like still thinking about over the next few weeks, but they are stocks that really interest me. Whereas Disney, I am for sure going to be buying Disney stock anytime soon, really, in like the next week, really. So that's kind of my aim going forward, guys. So if you could give the video a like, subscribe if you haven't, and I'll see you in the next video.